the joint MD of the company, joins us after a very long time. Shobhan, thank you so much for joining in. First up, what exactly is the expected shift from unorganized to organized players in as far as GST is concerned? What does that mean in terms of your revenues?
So we are expecting a substantial shift from the unorganized segment to the organized segment. A lot of the players would have to comply with GST, and tax evasion would become increasingly difficult. So we're expecting a major shift of market share to the organized segment. And at the moment, because the last month of the current quarter is very subdued due to reservations at the dealers' end for stocking, so we are facing a crunch in demand at the moment. So we are targeting a 5 to 7% overall revenue growth in the current year.
All right, Shobhan, let's get a couple of numbers then. The current organized market for the plywood segment is what? Around 30%, is it? And 70% is unorganized?
So basically, the plywood market, I would say, is divided into three segments. The top end would be the fully organized, where Century and Greenply plays about 15%.
Okay.
The mid segment, where there is a mix of organized and unorganized, would be about 45 to 50%, and the remainder would be the completely unorganized segment.
Okay.
And your opportunity lay in?
So there would be a shift both in the mid segment, where we are present through our trading products, and then there would also be the unorganized segment, where we would see a shift to our MDF products. Because pricing wise, the lowest end would compare with our MDF products, and the mid segment would compare with our trading segment.
All right, Shobhan, let's talk about your MDF plant. When does that plant come on stream? If you could help us out, what are the expected capacity utilization levels that you're looking at from that MDF plant? And if you could give us some kind of guidance, how is that plant going to ramp up in terms of revenues? What does it bring to the table?
So we are maintaining a Q3 start of next financial year for that plant. And at full capacity, that should add up to 1,100 to 1,200 crores to our top line.
Okay.
In the initial years, with a mix of domestic demand as well as exports, we are looking at about a 50% capacity utilization. However, that is in the first full year of operations, because since we're only starting in Q3, the first financial year would be truncated.
Correct.
So if you look at FY19 revenues in that regard, then 1,100 crores coming in from your MDF plant. You have all the other capex underway to 2,000 crores is what you did in the previous year. With GST and stuff, can we see it closer to that 3,000, 3,200 crore mark?
Well, no, the 1,100 crore revenue would, of course, come at full capacity utilization, which we would not see for the next 3 to 4 years for the existing and for the new MDF plant. So, next year, like I said, would be a truncated year. In the FY20, we should look at about 300 to 400 crores revenue growth from the new MDF plant.
All right, Shobhan, very quickly then, debt, I don't think it's very high. You have your capacities coming on stream as well. What's the outlook over there? Will you look to repay some debt? Are you comfortable at current levels?
Yeah, we have a very comfortable debt equity position at the moment, and we've run the numbers, and even with the increased capacity and increased debt, we would be well below 0.7, 0.8 debt equity ratio in the coming years at peak.
And before we let you go, the margin outlook, we have seen a consistent improvement because of MDF increasing its contribution to the revenue. What is that trend likely to be?
So this year we are targeting about a 50 to 60 bips improvement.
Okay.
Going forward, I think we should see better improvements when the new MDF line comes in and starts breaking even and contributing.
And 5 to 7% revenue growth in FY18 is what you're expecting?
Yes.
All right, Shobhan, thanks so much for stopping by and, in fact, giving us all those details. So that's the management then of Greenply telling us that, in fact, they are expecting top-line growth of around 5 to 7%, margins expected to expand by around 50 to around 70 basis points. And going ahead, they're seeing a gradual ramp-up of the MDF business. That helps in terms of revenues as well as in terms of margins, Mangalam.
Also, they spoke about the shift from the unorganized players into the GST. And do remember, talking about GST, to tune into our GST town hall today, Revenue Secretary Hasmukh Adia, where you can catch all the head honchos of India Inc. put together and putting forth their views and concerns on the GST as well as the government's response to those queries. This evening at 6 p.m. only on CNBC TV 18.
All right, then, on that note, we'll take a short break. But up next, we understand from sources that NASSCOM will project FY18 IT BMP services export revenue growth guidance at around 7 to 8%. Exclusive details when you come back.